Imagine you're watching a tug of war between optimism and fear. On one side, you've got investors betting big on growth and institutions steadily increasing their stakes. On the other side, you've got warnings from the Federal Reserve, concerns about overvaluation, and traders quickly adjusting positions. That was the reality of SoFi today, and it turned into quite a roller coaster session. Let's break it down step by step so the entire picture makes sense. Hello, everyone. Welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. SoFi ended the day lower by about 2.47%. The stock moved between a low of 28.85 and a high of 30.4 cents, but importantly, it didn't create any new 52-week or all-time highs. Interestingly, early in the pre-market, there were already hints that this could be a softer session because the trading volume looked abnormally low. Throughout the entire day, that pattern held up. Volume stayed under average. Normally, SoFi trades around 66 million shares daily, but today only 43.4 million shares exchanged hands. Lower volume often means less momentum and fewer chances of a breakout, and that's exactly how it played out. Looking deeper into the data, we had a mixed set of economic reports. The S&P composite numbers came in with manufacturing right on target, services actually higher than forecasts, and the composite index overall slightly weaker. But all of them remained above the 50 mark, which means the U.S. economy is still in an expansionary phase rather than sliding into contraction. The Richmond Manufacturing Index told a slightly different story. It dropped to -17 compared to a forecast of -10, signaling weaker regional growth than anticipated. But honestly, those weren't the numbers that shook markets today. The real market driver was Jerome Powell. His comments had far more influence than any manufacturing report. Initially, he struck an optimistic tone, pointing out that tariffs weren't hitting consumers as badly as once feared. He emphasized caution around cutting rates too quickly, acknowledging that there are risks no matter which path the Fed takes. My takeaway was that Powell is unlikely to push for a rate cut in October, at least not based on what he hinted at today. But what really rattled investors was one comment. Powell said stocks look overvalued. That's a rare statement from a Fed chair, and the ripple effect was immediate. The broader market sold off sharply with a chain reaction across multiple sectors. For active traders, that sharp move created a quick swing trade opportunity. Anyone who bought the dip and sold into the bounce had a chance to profit. But if you look at the options activity and overall sentiment, there's still more downside being priced in. Now, let's look at shorts. Yesterday, short positions in SoFi increased by about 2.2 million shares. Today, the increase was relatively minor, just 157,000 shares. That brings short interest to 8.7% of the free float, or roughly 102 million shares. Interestingly, shorts accounted for 50 to 60% of volume just days ago, but now that figure has dropped closer to 30%. So short sellers aren't driving as much of the action. Part of that could be due to institutional investors stepping in. With SoFi gaining more attention among big funds, even heavy shorting can't dominate the daily volume like it used to. Options activity was another story worth noting. Today, SoFi saw $54 million in calls traded versus $11 million in puts. That sounds bullish at first glance, but the detail matters. 44% of all option activity leaned bearish. Most of those bearish bets piled in while Powell was speaking, suggesting institutions were hedging or outright betting on downside in reaction to his remarks. For example, one large multi-leg transaction showed $20 calls being sold, which implies a lack of confidence in near-term upside. On the flip side, some $26 puts were also sold, which leans slightly bullish. But overall, the tone of the options market was tilted toward caution. From a short-term forecasting perspective, bulls are hoping SoFi can finish the week between $30 and $31. Bears are betting on a drop below $28. Where it lands may depend heavily on broader market mood, which is in Powell's hands right now. After hours, the trading looked balanced. Some pockets of buying, some selling, nothing extreme. In the dark pool, which often reveals what institutions are doing behind the scenes, there was only one big transaction worth noting today, a $15.3 million trade executed before the market even opened. Aside from that, there weren't any huge block trades or filings that suggested hidden catalysts, no SEC filings, no breaking news. This was purely a day dictated by macroeconomic forces and Powell's comments. Looking at technical levels, SoFi closed at 29.09. Key support sits around 28.43 and resistance is near 29.76. On the broader charts, 27.96 stands as a major support line while the next upside target is 30.25. Unless Thursday's GDP numbers or Friday's PCE inflation data come in much worse than expected, it's unlikely the lower support gets tested this week. The more likely scenario is that SoFi keeps bouncing between support and resistance while the market digests Powell's tone. Today also highlighted something unusual. Algorithms seemed far more active in SoFi than they have been in recent sessions. That algorithmic pressure made the stock more reactive to Powell's comments than it might have been otherwise. Compared to yesterday, there were more willing sellers around the 29 level, which may explain why SoFi struggled to hold momentum. After hours, it's hovering right around that 29.15 area, suggesting we may see a tug-of-war continue tomorrow. Here's the interesting part. Despite Powell's statement that stocks are overheated, the retail investor mindset continues to lean toward buying the dip. The market seems to almost ignore his warnings, treating every pullback as another opportunity. That mentality has fueled much of the resilience we've seen not just in SoFi but across multiple growth names. From a fundamental standpoint, Powell's caution makes sense. He doesn't want to rush into cutting rates only to regret it later. He's waiting for more clarity, even though recent data already shows inflation cooling, tariffs being less harmful than expected, and overall economic productivity climbing. In my view, there's enough justification for at least a modest cut in October. Whether or not the Fed takes that step is still uncertain, but the case for it is growing stronger. Finally, about valuations. Powell hinted that stocks in general might be too expensive, but remember, high productivity allows higher multiples. If the economy is genuinely becoming more efficient, then it's natural for companies to trade at stronger valuations. That's why I see his remarks less as a warning against growth names like SoFi and more as a general note of caution. For long-term investors, days like this can actually present opportunities. So to wrap it up, SoFi had a volatile session, influenced more by Powell's words than by company-specific news. Short interest remains elevated, but is less of a force than before. Institutions are clearly active, options traders are hedging, and technical levels are well-defined. Whether SoFi leans bullish or bearish in the coming days depends less on its own fundamentals and more on how markets digest Powell's cautious stance. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.